Hello and welcome to myfinanceteacher.org. Today let's have a look at a couple of relatively large miners. That's our long-term fundamental valuation for Agnico Eagle and AngloGold Ashanti. These are pretty large players in the gold mining sector. I would say they're perhaps in the top 5 of the largest miners in the world. And what we're going to do is we're going to have a look at the fundamental valuation, where we generally have a look at the discounted per share value after all-in sustaining costs, after their debts, and after taxes. This is a fundamental valuation which generally tends to play out in the longer term. But day-to-day and week-to-week market fluctuations can, of course, move the current market price of the shares away from this fundamental valuation. And looking at the fundamentals, we're going to look at the gold and silver prices. We're going to look at the reserves and resources these two miners have in the ground. We're going to subtract the debts that they have, subtract the taxes. We'll look at the per share value. We do take into account the time value of money. We use a discount rate of 5% here. And we'll look at the number of shares in insider hands. As insiders are well aware of what's happening with the company, a greater percentage of shares in insider hands is a positive sign. Starting with the gold price, as usual, we're going to have 3 scenarios. Our basic scenario plugs in the gold price of $1,900. And again, we're looking at a fundamental longer-term valuation. This basic scenario assumes that the gold price fluctuates somewhere around $1,900 perhaps over the next couple of years. The conservative scenario plugs in the gold price of $1,600. Again, no precise numbers here, some fluctuation around that level. And an optimistic scenario plugs in the gold price of $2,200 per ounce. Again, this is not extremely optimistic, and you might actually go much further than that once the Fed finishes with its tightening, which is extremely likely to happen, again, as I mentioned, anywhere over the next couple of years, as this is a relatively longer-term outlook. Next, looking at the reserves and resources the miners have, AEM has proven and probable reserves of gold of over 43 million ounces, and they have measured and indicated resources of nearly 40 million ounces. Beyond that, they also have inferred resources of gold, silver, copper, but those inferred resources are not taken into account in our valuation model. So that makes our valuation that much more conservative, even within the optimistic scenario. For silver, AEM has nearly 28 million ounces of proven and probable reserves and over 44 million ounces of measured and indicated resources. They also have quite a good amount of copper, as well as AngloGold Ashanti. They do have over 10 times more copper compared to AEM, but they don't have any silver. Instead, AngloGold Ashanti has proven and probable reserves of gold of over 28.5 million ounces and over 93 million ounces of measured and indicated resources of gold. And of course, all of these miners also have additional inferred resources, which are slightly less certain. Next, moving on to costs, debts, and taxes. All-in sustaining costs, which are substantially higher than cash costs, again, making our valuations that much more conservative, are at $1,025 per ounce of gold equivalent for AEM, and the costs are much higher for AngloGold Ashanti at $1,360 per ounce of gold equivalent. Long-term debt is also lower for Agnico Eagle at over $1.3 billion, whereas it's nearly $2.1 billion in long-term debts for AngloGold Ashanti. For taxes, for simplicity, I just assume 20% tax for all miners. Looking at discounting and per share values, the number of shares outstanding is nearly 556 million shares for AEM, out of which 0.1% is in the insider hands. It's not that much, but more than 0% for AngloGold Ashanti, not a particularly encouraging sign here. And AngloGold Ashanti has over 418 million shares outstanding. Looking at the time value of money, of course, it's going to take time to extract the resources and reserves out of the ground at the ongoing annual production, proven and probable reserve life is at 13.2 years for AEM, and if you add only half of measured and indicated resources, then the reserves and resource life extends to 19.3 years at current annual production. For AU, reserve life is at 10.7 years, and if you add only half of measured and indicated resources, that life of reserves and resources extends to 28.1 years. And I'm going to use a discount rate of 5%. Perhaps a higher discount rate is warranted if you think the risks are considerable in precious metals industry. Let me know what you think about it down in the comments below. For us though, the only thing to have a look at is the actual valuation provided by this model. Before we look at that, let me remind you that the members at myfinancesteacher.org benefit from much more frequent and detailed updates on a range of assets, including commodities, cryptos, energy, uranium, natural gas, crude oil, precious metals, as well as the general stock market. So to learn much more on all of these, you are more than welcome to join us at myfinancesteacher.org. And coming back to our valuations, the valuation shows, again, the discounted per share value after all-in sustaining costs, after long-term debts, and after taxes. In our conservative valuation, we plug in the gold price of $1,600 and we value only the proven and probable reserves in the ground without looking at value of measured and indicated, never mind inferred resources. So this gives us a conservative value of $24.61 for Agnico Eagle and $4.04 for AngloGold Ashanti, showing that if gold price really drops out of bed here down to $1,600, down to $1,600, and stays there for a while rather than bouncing back up, there is still considerable risk in the miners. But is it likely though for gold price to stay around $1,600 over the next 2 to 3 years? Personally, I don't think it's very likely. Let me know what you think about the gold price down in the comments below. Moving on to the balanced valuation, we still look at the value of only proven and probable reserves in the ground without including any of the measured and indicated, never mind inferred resources. This time we plug in the gold price of $1,900 per ounce. That's if gold price averages somewhere around that number over the next 2 to 3 years. In that case, the discounted per share value after costs, debts, and taxes is $35.69 for AEM and $14.14 for AngloGold Ashanti. As you see, the percentage jump in price for AU is greater than that for AEM, moving from the conservative to the balanced scenario, where the AEM valuation increases by around 50%, while the AU valuation more than triples from $4 to over $14. That's actually because of higher leverage. As costs are greater for AngloGold Ashanti, that creates an additional leverage versus gold price. And lastly, looking at the optimistic valuation, where we value the proven and probable reserves and only half of measured and indicated resources, never mind any of the inferred resources, and we plug in the gold price of $2,200 averaging over the next couple of years. That gives us the value of over $60 for Agnico Eagle and over $45 for AngloGold Ashanti. Well, wouldn't that be nice to have these miners around these price levels? Let me know when we can reach these prices. 2024, 2025, perhaps sooner. Let's have some lively price opinions down in the comments below. Have a nice day. Bye-bye.